Oh,
For the last 15 weeks, my co-managers and myself have worked to build a promising future for our business, Active Archive. At the beginning of the simulation, we ranked fifth on the game-to-date scoreboard and ending the simulation tied for fourth. In this presentation, we will discuss our progress over the last 10 years and give insight to our strategy for the next 2 years, starting with total revenues. Active Archive managed to increase revenues year after year, unlike any other team. Year six, we were just under industry average, and year seven, just above. Steadily increasing throughout the years, we were able to average an 11% increase year 10 through year 15. Although we invested the most in creating our products, we were still able to find a balance and profit year after year. We struggled somewhat with our earnings per share, finding it hard to appeal to investors like we were able to appeal to customers. We beat investor expectations year six, year seven, and year 15. In an attempt to boost our EPS, we made charitable contributions, incorporated green initiatives, established a renewable energy program, amongst other things, and to no avail, struggled throughout the years to finally, in year 15, beating investor expectations by 13 cents.
as for our return on equity, our highest year was at 40.8%. And even though we had a rather low return on equity throughout the simulation, year 11 was our best. We stayed pretty close to the other competitors as we had a high net income and high shares in stock in this year specifically, which boosted us nearly 20% from the previous year, year 10. Our lowest year was year 8, where we only had a 21.6 return on equity, once again staying close to the other companies. But in year 8, we had both the lowest net income and stock shares, which did bring us down. As for stock price, our highest year was year 15. And year 15 was we made $373.43 per share, which was the second lowest, but it was a $211.13 increase from the previous year. And our lowest year was the first year of the released data, which does make sense as we had not placed much money into advertisement in the start, so no one knew who we were to really know where they wanted to place our stocks. Definitely not us without any knowledge. As for credit, excuse me, I apologize. And credit rating, our highest years were 12 through 15, as we were consistent at an A+, and throughout the simulation, we never fell below an A-. We were very aware of our debts and kept them minimal, and ended the simulation having $0 in debt. Our lowest year was year 6, which is understandable as we had just started out and had little credit history. Then for our image rating, our highest year was year 11, where we hit a 98, which is a nearly perfect score, where only one team had a 99 that year. Over years 14 and 15, we had the highest image rating of the companies at 89, as our image was very important to us. Also, we had second place in corporate responsibility in every year but year 15. Our worst year for our image rating was year 6, which was likely caused by minimal advertising, which means we really couldn't have an image. We started gaining ground in year 9 and were almost on par with the other companies in our worst years, only being separated by at max 11 points and at minimum 1 point.
Our company vision. Our vision is to become the most recognizable brand in all 4 regions by selling the most quality product. Our main priority is to attract the loyalty of our customer by selling them the most products, the good products, and also we will provide excellent quality for our customer, and we'll maximizing our shareholder value, and also we will investigate in long term for employee benefit. Mm. Target numbers. Our EPS was 80 was 8.51 for year 15 and 14 for year 15 will it increased to 14.63, and our ROE was 22.7%, increased to 31.9. Stock price was one 162.30, and it's increased to 373.43. Our credit rating was still the same, A plus. Our image rating still the same, 89. For AC for AC cameras strategy, from year 6 to year 15, our company followed the global low-cost leadership strategy, and our company always offer longest guarantee, and we always offer sale promotion for our clients. And our sale promotion will keep in constant for 2 weeks for year 15 to for year 14 to year 15 at 22.7%, and in North American, Europe, African and Asian Pacific and Latin American will keep at 20.30%. And our PQ rating will just below our expectation for our AC camera.
Our strategy for the drone employed a global best cost strategy, which we accomplished through offering the number one ranked product for the lowest industry average. We focused on marketing in North America and East Africa by investing in online advertising and retail support. And in Latin America and Asia Pacific, we focused on providing a low-cost quality product to market itself. Our strategy showed successful throughout the years as we maintained a good percentage of the market share in each region, only losing market share in year 8 and year 12, but refraining from falling below 18% thereafter.
Our production was something that was very important to us from the very start. We actually made what we felt to be a pretty good investment the very first year, which was installing the robotic upgrade for the drone facility. This ultimately led to us saving having to hire 120 employees in the long run for our drone facility. Only 60 of our drone units required overtime production over the entire course, and we never had a product shortfall due to stock out in either the camera or drone workforce. And we were actually able to pick up some sales due to other companies' stockouts in years 7 and 13. And it's worth noting that we had a much higher than average total compensation for our camera and drone workforces.
Our finance strategy for the next 2 years is to keep our dividend at 90 cents in year 16 and increasing it to $1.10 in year 17. This is to help boost our earnings per share. We also plan to boost our earnings per share by repurchasing stock back 1,000 in year 16 and 2,000 in year 17, and maintain a credit rating of an A or higher. We plan on doing this by using some or creating some debt by adding workstations to the drone facility to accommodate the increase in our market share in each region that we plan to obtain over the next 2 years. Sorry.
For our competitors in the camera industry, our rival kind of started off as Company B just because they had a really good product early on. And our vision was to have the best product in not just the camera industry, but the drone industry as well. So they were kind of our early rival. But that kind of shifted to Company D towards the end of the simulation because they were the ones really starting to gain more market share. Um, and we believe that was due to their high amount of product features and high amount of retail stores that they sold their products through. For our drone, Company D was also our main competitor towards the end. They held the second highest rated drone behind us, and they held a very high market share in all the regions. And this is actually a competitive assessment from year 9, but we felt that it still holds a lot of value through the end of the years. Company B early on with us, and then Company E kind of the standard as they went ahead and won the simulation. Some of the competitive actions we would take against our rivals in the upcoming years include tweaking our price. We felt like we had a pretty good product towards the end and we were pretty happy with it, but just kind of messing around with sales promotions for our cameras and our online discount for our drones, and then just an overall advertising, working on that each year just to kind of fine tune our market share. And it's also worth noting that our total net sales revenues went up each year, every year of the simulation, and we actually held the highest total net sale revenue in years 14 and 15. And we believe this is directly aligned with our vision of holding the #1 rated product for the drone and the second highest rated product for the camera. And we actually were able to gather 4 of the 8 total regions in both of these industries. And going off what I just said, we felt like we ended the simulation on a pretty high note, bouncing back after a couple lows. We felt pretty happy about where we ended, and we felt that it was a success for our company. We felt that we learned more from not necessarily creating a plan and following it, but kind of reacting to how that plan changes. Um, Mike Tyson had a quote that I liked. It's everybody has a plan until they get hit for the first time. And we feel that that kind of was our story of the simulation. And we were actually able to end, like I mentioned before, with half of the market shares. We held the highest market share in 4 of the 8 total regions in both the camera and the drone.